It was reported that Trump is easing pressure on American car makers by reimbursing some levies on imported auto parts and further exemptions from additional duties. This is as many players asked for more time to relocate supply chains. The developments helped to ease fears as the president visited Michigan, a cradle of the U.S. auto industry, and just days before a fresh set of 25% import taxes was set to kick in on auto components. As Trump signed orders with a mix of tariff credits and relief, the U.S. Commerce Secretary Howard Lutnick confirmed that a deal has been signed with a major foreign power that should permanently ease reciprocal tariffs, though Lutnick has not identified the country, adding the deal was still pending local approvals. Amazon says it's not planning to display the costs of tariffs on products sold through its marketplace. The White House had earlier described the act as hostile and political. Jeff Bezos, the American tech giant's boss, is understandably concerned on the impact of its e-commerce business, as China makes 70% of Amazon's products and now facing 145% tariffs. It is 100 days since Trump emerged as US president, and what a 100 days it has been. Call it what you want, it has certainly been the most unusual, consequential, and busiest 100 days for the man determined to leave a legacy like no other. Most will say this is nothing but a wrecking cannon, while loyal Trump supporters argue that more time is needed to allow gains to settle. Supporters say we are to look beyond tariffs to a major trade, tax relief, and deregulation legislation to be ready by the 4th of July, the day declaring U.S. independence, and set to deliver big wins for Americans. Still, the consensus is that indeed the 100 days has been of shock, but we are still waiting for the awe. Hello and welcome to Global Business Insights, where we look a little closer at some of the headlines moving markets to equip viewers with perspectives that would help them thrive in what many are calling an unprecedented era of uncertainty. US stocks closed yesterday in positive territory after seesawing between modest gains and losses in choppy trading as investors assess the latest round of corporate earnings, economic data, and changes on the trade policy front. Shares in business meal delivery company Deliveroo spiked up 17%. That was on Monday after it said it had received a $3.6 billion cash buyout proposal from US pair DoorDash. Deliveroo is recommending the 180 pence per share offer, which DoorDash must confirm by May 23rd or else walk away, to 22.8% premium to Deliveroo's last Friday closing price. And brewing giant Carlsberg, which bottles the Coca-Cola drink in Denmark, is facing a backlash from consumers reported to be boycotting the iconic American brand. This is to protest against Trump's repeated threats to take over Greenland and autonomous Danish territory. And in Malta, it is reported that so-called golden passports are found to violate EU rules. The European Court of Justice is demanding an end to the scheme for granting foreigners Maltese citizenship and thereby the right to live and work anywhere in the EU. That is in exchange, of course, for investing 1 million euros. The court argues the passport has rendered the acquisition of nationality a mere commercial transaction. UPS is cutting 20,000 jobs this year and closing over 70 buildings as it reduces costs and prepares for a halving in package volume expected from Amazon. That's its biggest customer. The cuts, which targets workers responsible for delivering packages to consumers, is on top of last year's cut of about 14,000 jobs, primarily in management roles. U.S. Treasury Secretary Scott Bessent again on Tuesday said that President Trump is creating strategic uncertainty in trade negotiations, but adding that the aperture of uncertainty will be narrowing. He added that 17 deals, I guess that would include Japan, possibly other countries like the EU and the UK. These deals could be ongoing in the next few weeks, he says, and he also says he does not anticipate supply chain shocks as the IMF chief economist had predicted. Bessent also says he would like to see internet tax in the European Union removed. China is increasingly pivoting towards Africa. Last week, a landmark pact, you recall, between Beijing and Nairobi was signed, expected to take the relationship between both countries to the next level. And just on Monday this week, the Chinese ambassador to South Africa, Wu Peng, said he had a good meeting with the CEOs of the Citrus Growers Association of Southern Africa. The ambassador also said China and South Africa need to strengthen bilateral trade and economic cooperation, and welcomes more South African agricultural and industrial products to enter the huge Chinese markets. Africa is perhaps the still untaken bride, and Africa needs to be careful to ensure it acts in its own long-term best interest. A debate I suspect Africa is yet to have. China's manufacturing activity was down more than expected to a near two-year low, sliding into contractionary territory in April as the escalating trade war with the US may be beginning to be hurting. The official Purchasing Managers Index, according to data from the National Bureau of Statistics, came in at 49.0 in April. That's a contraction for the first time since January. The Caixin S&P Global Manufacturing PMI, however, slowed to 50.4 in April, still in expansion from 51.2 in the previous month, indicating, like I said, a modest expansion and better than forecast. PMI for non-manufacturing activity, which covers services and construction, also fell modestly to 50.4 in April from 50.8 in March. Still on data, later today we do get from the US some of the macroeconomic data coming in. Economic growth is expected to show a near stagnant print, while inflation may show some progress downwards. That may help the Fed consider a rate cut, also as economic conditions may be showing more weakness than we expected in the previous months. We also get the private sector jobs data. Economists are expecting the ADP National Employment Report for April to show a 125,000 jobs increase in after gains. That's after gains of 155,000 jobs in March. First quarter estimate for GDP is expected to be tepid, 0.4%. That's 2 percentage points less than in the fourth quarter. Also, the Institute for Supply Management Chicago Business Barometer for April is expecting a 46 reading. That's about 2 points less than the March print. US pending home sales seen rising 1% month over month, down from a 2% increase in February. Also, the March inflation, that's the PCEI, that's the Personal Consumption Expenditure Index, the preferred gauge used by the Fed, is expected to show a 2.2% year over year increase. That's a decline from February. Core PCE index, which strips out volatile food and energy prices, is seen rising 2.6% compared to 2.8% previously. Could also be the lowest annual reading since March 2021. Was the U.S. White House Press Secretary Caroline Leavitt right to describe printing U.S. tariffs on Amazon's site as an anti-American move and a good reason to buy American? Also accusing Amazon of previous cooperation with the Chinese for commercial reasons. Was it also evidence that tariffs will be borne by US consumers? What are the lessons from this incident, as Amazon clarifies that no such disclosures will happen on its site? It's also worth discussing the convergence of geopolitics and commercial themes as we see a new emerging order, which is, of course, looking painful for the global players like Amazon. How do you manage the new political pressures? If you have bought frequently on Amazon like I have, prices tend to change very frequently, as you would observe. The makeup of prices include variable and fixed costs and margins and levies, and the ultimate price is also subject to price and volume, sales volume considerations, and we have different break-even positions. For some goods, there could be scope to absorb additional tariffs by tweaking cost drivers downwards or accepting a lower margin to get volumes that you want, but to others there will not. Adding a distinct tariff measure for customers unfamiliar with the mix that goes into the price may result in many misled to think that it's all tariffs responsible for price increases, and indeed it could be, but not always, as we all know. Sellers could also take advantage by marking up prices unfairly. Who is to do the math? The other issue is a trend of corporate alignment with political interest. Elon Musk's Tesla has been branded almost irreversibly now as a MAGA ally. Musk may be an ally, but Tesla is a distinct company owned by a mix of shareholders. Many agree that a more subtle advisory role in the Trump government would have been much more appropriate for Musk, instead of being the front face of Doge, threatening to deploy a chainsaw to cut down waste in the government. Musk must have known that this will not go without fuss and strong resistance, as we saw. It's not exactly the same as going after Twitter, which you own. And it may be many years before Musk and his companies are able to shrug off the tag and reputation damage. It doesn't matter if Doge succeeds or not. It's the politics. Politics can resemble a pendulum swinging in one direction and then the other. Business cannot risk its long-term positioning under the shadow of a party or as a lever for its opposition. Trump is reported to have complained to Bezos. More accurately, a thinly veiled threat may have been delivered. Musk has already seen he will be fading out of Doge to focus on his businesses, and we see these developments go on. Business should not mix with politics. It's like oil and water, but the private sector should understand and manage its relationship with different governments as a major stakeholder to ensure they deliver for other stakeholders, and to be sure they are interpreting context changes from country to country and having the appropriate response. An effective government affairs role has certainly become much more important, could be more impactful to avoid missteps. This does not mean an end to environment, social and governance or diversity, which are indeed very important, but it means the approach may differ as the geopolitical context changes. The German economy escaped recession. That was this morning after having contracted in the last quarter of last year by 0.2%. GDP came in Q1 2025 at 0.2%, just in line with forecasts due to improvements in consumption and investment. German auto giant Volkswagen saw a substantial drop in Q1 profit as it navigates the impact of US tariffs on the global car industry. Q1 operating profit sank to 2.9 billion euros, that's $3.3 billion, down 37% from the same period last year. Barclays Bank beat slightly on the top and bottom line in the first quarter, helped by stronger investment bank performance. Pre-tax profits came in at £2.7 billion, up 11% year-on-year and ahead of analyst expectations of £2.49 billion. Shares were mostly higher in Asia after US stocks rose again as companies reported stronger than expected profits. Well, that's all on this special edition of Global Business Insights. Thanks for watching. This is Bode Oshosami. Bye-bye.